Hello, everyone. Welcome to the Trade Station Masterclass. My name is Jesus Nava. I'm the Director of Client Training and Education for Trade Station Securities. It's a pleasure to be here. Let's talk about strategy elements. And today I thought we would go back to the basics on how to backtest a strategy without any programming. Before we jump into the topic of today's presentation, let's go through some of the disclosures. Keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, active trading is not suitable for everyone. It should only be done with risk capital. And past historical performance, which is one of the main focuses of today's presentation, is no guarantee of future results. For additional information on these disclosures, make sure to visit our website, www.tradestation.com/. important dash information. All right, guys, there's a couple of ways that you can interact with me. You can use the chat window. You're welcome to send any comments or questions. Just make sure that you set your chat windows to everyone so that we can all follow along. I'm also going to give you guys the ability to use your microphones. I do ask that you keep your microphones muted so that we don't get any background noise, but I want these classes to be as interactive as possible. Let's go ahead and switch over to my TradeStation platform and get this conversation started. I'm going to come over here, open up a chart analysis. Okay, and let's pull up SPY. SPY on a daily basis. So this is a daily chart of SPY. SPY, we know that it's an ETF that is based on the movements of the S&P index, but it's trading similar to a stock. So if we develop a strategy around SPY, this will be a strategy on the S&P 500. Now we can use any strategy that's part of the TradeStation platform. In fact, TradeStation designs strategies that are not in no way complete strategies, but designs strategy elements that you can throw into the mix and get a strategy performance report. Of course, I want you guys to get into the groove of analyzing a strategy, looking at the risks, managing that risk, and being able to develop something that it's sound, something that you can use elsewhere. A lot of times, when I do back testing exercises, we don't end up with anything that is substantial, and that's usually the case. When you look at a strategy, it's a lot of fun. You see the profitability historically, but of course, this is no guarantee that it'll do the same going forward. In addition to doing a historical back test, you would have to do a forward test, meaning you have to let the strategy run and generate orders and make sure that it's doing exactly what you're wanting it to do. All right, I see a few more people coming in. Thank you for joining us in this masterclass. Let me go ahead and add, first of all, a study, because every strategy is designed around the calculations of a technical study. For this presentation, let's use, I don't know, let's use a trending strategy. Let's use a MACD. MACD, I think all of us know what the MACD does. If not, I'll give you a little bit of brief description. Here we have the MACD at the bottom. So the signal is when the histogram, the MACD difference, turns from positive to negative or negative to positive. So whenever you see the histogram turning green, that is a bullish signal. And whenever you see the histogram turning red, that is a bearish signal. Of course, there's other two lines inside of the MACD, but those are used in the calculation of the difference that you see in red and green. So guess what? We have a strategy that follows that signal to the T. And you're going to notice that if you go to studies and you go to add strategy, you're going to find strategies that follow most technical ideas that are available in the market. And a lot of times these are very well known technical ideas: Bollinger Band, price channel, Keltner channels. You have DMI, RSI, whatever the technical idea may be. TradeStation probably has a strategy component that you can add to the mix and test. So I'm gonna scroll down here to MACD. And a lot of times you're gonna see strategies listed here. It appears to be multiple times. Like if you see key reversal is listed 4 times, but each one of these pieces have a different, end suffix. In this particular case, the LE stands for long entry and the SE stands for short entry. Now, what happens if you have a strategy that only has entries? In this case, I'm highlighting 2 of them, long entry and a short entry. What happens is that the strategy will turn into what's called a reversal strategy, meaning that if a long entry is generated, yes, you're long, and you'll keep that long trade until a short entry is generated. What happens when a short entry is generated? What it says, well, it's time to close my long and go short. So it's like it's a strategy that is always keeping you in the market. You're reversing back and forth between a long and a short, and you always have a position open because that's the only 2 components that you have reacting to the market prices. Of course, we can include other strategies that can add other exits, but for now, let's just go ahead and leave the long entry and the short entry. When we do that, the strategy will find every single instance where the strategy would have generated a trade. And if we look closely, the signals, which are the little arrows that you see on the candlestick, will align with the crossovers of the MACD. And you see that when the MACD crosses to the positive side or turns green, we have a blue arrow. That's a long trade. And whenever the MACD turns negative, we have a short trade, which is a red arrow. And if you check that historically, you're going to see that those entries align perfectly with the MACD because they're both calculated on the same numbers and parameters. Of course, if we make changes to the parameters of the MACD at the bottom, we have to make those adjustments to the strategy because they are independent. Even though they're both based on the MACD, they're both doing their own thing. So they're not really paying attention to what the other is doing, okay? So keep that in mind. Also, let's take a look at the labels that go along those arrows because that's important to notice as well. With the red arrow, which I pointed out to be short entries, you have the name of the signal that generated that trade. So you have MACD SE, which is what it pretty much says, MACD short entry. And then you have the position size that you're holding. A negative 100, of course, in this case would mean that you're short 100 shares of the MACD strategy. Pretty cool, huh? So every signal has that label telling you, okay, what is your net position? For the long signals, of course, you'll see a positive 100, meaning that you're long those 100 shares. And another thing that the strategy does automatically is that it connects the entries with a dotted line. And the dotted line tells you if you've got a profitable trade or a losing trade. If you see a red line, the trade lost. If you see a blue line, you see that the trade made money. But I want to emphasize here that we haven't even touched the programming of the strategy. This is the type of work or the type of backtest that doesn't need an easy language programmer. You can just take these strategy elements and test them out of the box. So we did our strategy here. And if I scroll back, let's see how far back this strategy goes. The first bar of the chart is September 14th, 2020. So we have 2 years worth of data. Okay, I can load more data. The strategy will always be responsive to all the data that you put in the chart. Now, I want you guys to keep an eye on something. If I go to settings here, and you can go here as well, settings, and go to preferences. These are chart analysis preferences. If I go to data, on the data tab, there are going to be 2 checkboxes that I believe are turned on by default. So if you're doing this on your trade stations, you're probably you're probably seeing the two check boxes checked. The top one says, do not automatically recalculate open chart analysis windows that have at least one study, indicator show me or paint bar with the alert enabled. And the second checkbox says, do not automatically recalculate open chart analysis windows that have at least one strategy applied inserted. This is important because if these checkboxes are checked, when you request additional data for download, the strategy will not recalculate and it will not use all the data that you have loaded onto the chart. When I did the first back test, I already had, the 2 years worth of historical data. So it's using all the data that's there. But if I change the historical data amount and I load more data, this will prevent the strategy to recalculate and use that new data that just came in. So guess what? I came in here and I unchecked them because most of the time, when I load additional data, I want the strategy and I want the studies to use that data that's coming in new. So you probably are asking, why is it turned on by default then? The reason why it's turned on by default is because we want to prevent the accidental placement of orders or the generation of new alerts that shouldn't be generated. Why is that? Because in a recalculation, of course, the indicator code is ran again. And if an alert needs to be generated, it'll run it again, even if you have already, heard the alert. So it may seem like you're receiving two alerts, but you're not really. It's just that the strategy recalculated and generated the same alert. The same happens with a strategy. If you have a strategy running on the chart, the strategy may have generated an order. So if it gets new data and it recalculates, it's going to try to send that same order that was just sent. So on any recalculation, the strategy doesn't keep track of what it's done in the past. A recalculation means, oh, I'm starting from scratch again. Let me send that order one more time, and you could get duplicate orders. That's the reason why these checkboxes are turned on by default, because we don't want that to happen. We want you guys to be aware that if you're turning it off, it's because you do want the recalculation to, use all the data, and you're understanding that this may, generate new orders or trigger new alerts. Hopefully this makes sense. I just wanted to give you that additional information because, of course, this is the masterclass. And I did say at the beginning, let me go back to the basics, but I always like to interject, some tips here and there so you're aware of what's going on. So without those check boxes checked, I know that if I request a whole bunch of historical data here in this chart, the strategy will recalculate and use it because I'm not preventing it from happening. So let's go ahead and click OK. I'm going to load 5 years of data. And the way that I do that is by typing it in. 5 years. I'd hit enter. And then if I scroll back, let's go ahead and try that. I'm going to scroll all the way back. You can see that I have strategy signals going back until the beginning of the chart. And if I check the date of the very first bar, you can see the date on that, this is called the data tips window. You can see the date is September 14th, 2017. So we have 5 years of data. So why did I load more data? Because when you do a historical back test, you want to have, you don't have to have, but you want to have a significant number of tests generated so that you have a statistical significance to the report. If you have a statistical report that is based just on a couple dozen trades, that's not very significant. So let's load more data so we can get more trades. And that way, if you have 100 trades and those 100 trades, you have, let's say, for example, a 60% profitability, that's significant because you've tested it on 100 trades in total. So let's go ahead and take a look at the strategy performance report. Once you have a strategy in place and you see entries and exits, we're all itching to see how well the strategy did. Notice how I said how well, because it could say how bad the strategy did, right? So let's go here to data and go to strategy performance report. Okay, let me maximize this. And I'm going to go here to the performance summary. Take a look at the tabs at the bottom. There's multiple tabs. There's a ton of information that you can gauge and measure just to see if the strategy works or not. Okay, so first thing that I take a look at is total number of trades, 109. So as I said before, if I had left just the 2 years of data, in fact, let me show you exactly what happens. I'm going to type in 2 years. Using 2 years, I have about 42 trades. So statistically speaking, that's a good size. You know, it's always said that you should have at least 30 historical trades and a historical back test to have some numbers that make some sense. You know, you don't want to have less than that. So 2 years, it's 42. If I add the 5 years, it brings up the number of trades to 109. And of course, we have more trades because we have more historical data, more opportunities to get in and get out. So let's go back here to the performance report, because this is where we start thinking about the strategy and tweaking it and making it work for us. Take a look at the total net profit. It appears that it's a good strategy because we are making money. It's positive. We're making about or almost $4,000. If you think about it, it's in a time span of 5 years. So it's not really that much money. Yes, it's fun to see the strategy performance report be positive, but think about how long it took you to recoup that money. How long did it take you to accumulate that profit, which sometimes, you know, puts things in the right perspective. Also, take a look at the gross profit. The gross profit means that through the history of this strategy, you made close to $50,000, $48,000 to be exact. So why did you only hold on to 4,000? Because we lost $44,000. So this is a strategy that clearly doesn't work. The fact that it's a profitable strategy doesn't make it good. You know, you're not going to risk $50,000 to make only 3. It makes no sense. Any trader would not do that. And this is a clear view of what would happen if I had traded this strategy the way it is. The profit factor is 1.09. So it's like a wash strategy. You traded for nothing. You went through that trouble of stressing about positions and drawdowns and trades and for nothing, because you barely broke even. For every dollar that you lost, you made $1.09. Whoopee! So you can already say or tell that this strategy, of course, makes no sense. You know, out of the 109 trades, you have 31% profitability, very low. The average trade net profit, $35. Now, think about something else here. Something else that we haven't even touched upon, you know, the strategy is the type of strategy that assumes a perfect fill. So when the strategy signal gets generated in this particular strategy, I believe it sends market orders, and market orders are open to whatever price activity is happening at that moment. Now, the strategy, the way that it works is that when the strategy order is generated, you're going to get filled on the next tick, whatever that price is. And it's usually the opening tick of the bar. We know that in a fast moving market, that's probably not realistic. If something's moving really fast, for you to get a very specific tick price, it's difficult. There's always some slippage. You know, the price moves away from what you really wanted. And this could be beneficial, but this most of the time works against you. It's called slippage, and this strategy result doesn't even count that, because as I said at the beginning, the strategy assumes a perfect fill. The strategy just says, okay, you want to get filled at market, well, the next available tick is that one, so I'm going to fill you at that price. When in reality, you know, you could be sitting there and watching the market move and your order sitting there not getting filled at all, even if it's a market order. So that happens, you know, in fast moving market, and you may not get the price that you really want, which could negatively affect the performance of your strategy. Prasad is asking, is there any tool within TradeStation that we can go back and see what happened on the lost trades? Yeah, this would be the tool, the strategy performance report, because this gives you a detailed analysis on what happened to every single trade. In fact, let me jump over here to the next tab so we can see trade analysis. All right. So in trade analysis, we have, well, even before we get here to trade analysis, let's go to the performance summary. You have the largest losing trade is $2,000. So that's very significant. That's about 5% of our gross profit. 4%? Yeah, about 4% of our gross profit. That's significant. So we probably need something in place to manage that. Our largest winning trade, okay, it's good. It's almost $7,000. But it's also something that you need to take into account, because what percentage of this largest winning trade represents your total net profit or the gross loss? Sometimes you don't want to have trades that represent a huge percentage of your profits, because how likely is for that trade to happen again? So a lot of times these trades are what we call an outlier. If all of your trades have an average profit of let's say, well, in this case, let's use real numbers here. Average net profit, average trade net profit's $35. And all of a sudden you have a winning trade that's almost $7,000. It's an anomaly. Doesn't happen all the time. I'm not saying that it's an outlier, because it could happen in trending strategies. We usually have that behavior where we get these large trades because we are just going with the trend, but sometimes it's not realistic. So let's go here to the trade analysis. In fact, let's go here to the performance summary one more time, because I'm going to expand here a moment. When I expand, there is one net profit that is adjusted. So let me click here just to get a detailed description of what this is. This is adjusted total net profit. What it does, as you can see here, displays the net profit or loss for a worst case scenario during the specified period. Profit is displayed as a positive number, loss is adjusted net profit. So net profit is adjusted, gross profit plus adjusted gross loss. So the calculations here, it just takes, this one in particular takes the square root and subtracts so it's a more advanced formula, but let me see, select total net profit here instead. Select total net profit. I think this one is the one that, okay, this is the one that removes the outliers. So excludes trades that are more than 3 standard deviations from the average trade during the specified period. So when you look at select total net profit, it's I'm not going to say realistic, because maybe the one that it's showing you up here is the one that is realistic, but this select total net profit uses standard deviations to remove any trades that are at the extremes. So it's a more conservative way of looking at the strategy performance. And you can see that that is a losing strategy. And this one right here is a little bit more conservative than select. And you can see that it's a losing strategy. It's always good to look at the net profit using different calculations, because it does give you a little bit more insight as to what's happening to the strategy. Okay, so let's take a look at this trade that lost $2,000. I'm going to go to the trade list. The trade list just gives you every single trade that was generated. And here we see the net profit of each one of those trades and the cumulative net profit as well. So let's go ahead and see. So this is cumulative, and this is net. Yeah, sometimes, the column headers don't align well with, the data that's under it. So sometimes I have to figure out, the one that is linked to the amount, this is your net profit and net loss. And this would be the accumulated one. So it gives you the net and then the accumulated. And if we look at our losses here, when did we reach that $2,000 loss? I know we have about 100 trades, so it should not be very difficult to locate it, and it's right here. So it bought, this is Spider. It bought on March 3rd, 2022, which is this year, at 440, and it sold the 8th, so 5 days later. I'm not sure if there's a weekend in between, at 419. Let's look at the chart to see what happened there. So this is March 3rd to March 8th. March. Is that the biggest loss? That's not, doesn't look like it's a big loss, but it is. Right here, March 3rd. We have a weekend in between, and it closed down here. So you can see that it sold at 419. So it bought at 440. So the big drop in price, that was the largest losing trade. So there's a few things we can do here. So once you start analyzing the strategy, we're not here with the objective of making this work, because we're not. But I just wanted to show you that you can take any strategy from the list of the ones that come supplied with TradeStation and have a historical back test very quickly. Can the strategy be optimized? Well, this is using MACD with the standard parameters, and the standard parameters is 12, 26, and 9. So it's using a 12, 26 moving average, and then a 9 for the MACD average, and then the difference on that. Yeah, those are the ones that have been used historically for the MACD, but there's nothing in the MACD that would stop you from changing them. If I go here into the back test, I wanted to do optimization, but let's not talk about optimization because it'll throw us into a tangent. There is a presentation in the archives that talk about optimization. I want to use some other components here without going into optimization that could probably give me a different result. But let me go ahead and click OK to this. I'm not going to do anything to it. I'm going to go to Studies, Add Strategy, and let's do something to manage our risk. I'm going to use something percent trail. Percent trail is a type of strategy that's looking for a minimum profit before it kicks in. So instead of doing percent trail, let's do a dollar trail, which activates immediately. So let's go here, dollar trailing. I'm going to click OK. The dollar trail here is looking for $1. Let's go ahead and use that as is and see what happens. If you're doing $1 per share, it's $100 loss. Maybe it's a little bit too tight. Let me customize that. Since our largest trade was 2,000, I'm going to make this 5, which limits the loss to $500. How did I come up with 500? Because I'm trading 100 shares. So if I set the amount here to 5, it's 5 per share. So it's $500. Let's see if we're able to control that $2,000 loss. I'm going to click on close. What this does, if you just noticed, it's going to affect our losing trades. Now if we go back here to March 3rd, we don't see that losing trade anymore, the one we were looking at. That's because we have a trailing stop in place, but it also exits some of our winning trades that were large. Let's see what effect did this have on our profitability. Okay, let's go back here to performance summary. Take a look. So not bad, Now looking at this, I'm saying, okay, in the past 5 years, I made $7,000, but it's not as crazy as the one before. I'm still kind of, not happy about the profit factor. I'm only making about $1.42 for every dollar that I lose. I would want to have a little bit more cushion in there. Let's go and take a look at this other question here for a second. You put constraints on when to get out of the trade based on certain criteria, like if it hits certain low value, wait for 3 or 4 days for sure. Those are strategy rules that you're talking about, Prasad. Those would have to be coded in easy language. Today, we're talking about strategy trading without having to go to that level. But if I like the way you're starting to think that, okay, I may want to introduce my own strategy rules. If this happens and that happens, I want to have an effect on the strategy. That type of thing needs to be coded using easy language. But for now, we can just use our strategy trading component and just test right out of the box. So it made it profitable. I chose 5% as the optimal value. In this case, I am going to use optimization to optimize 5. It was a value that I, picked because I was looking at the maximum loss of 2,000, and I didn't like the 1 because it's a little bit too restrictive. If I had left it at 1, let's see what would have happened if I had left as the original 1, the way that it comes. If I go to the performance report, it actually makes it better. My profit factor is $2. I make $2 for every dollar that I lose. So maybe the lower numbers are better for this. Now take a look at the largest losing trade. We don't have that $2,000 trade anymore. Now it's down to 126. But we also lost, the largest winning trade that was almost 7,000. Remember that? It's down to 860. But it's okay, looking at the overall strategy, I would be, and this is just a personal opinion, I would be a little bit more comfortable trading a strategy like this than the one before because of my profit factor. Interesting. The average trade net profit went up. Pretty cool. Can you choose one trailing stop for loss and one for winning trades? Yes, you can. And in that case, it would have to be also programmed. This is also a condition. So you're saying, okay, if it's a profitable trade, do this. If it's a losing trade, do that. If I turn on the built-in stop, which I did, dollar trail, that one is active for both. And there's no way to specify only be active if you're losing. But it's something that you can code in easy language as well and say only be active when we're losing ground. All right. Let's see what else. So what I was going to show you, if I go back to the strategy, let me show you a little bit of optimization. I can optimize that value, this dollar trail, and say, let me optimize this and say, go from 1 all the way to 20 in increments of 1. So 20 stop values, and see which one is the most, which one is the optimal for the historical back test. It'll pick, the one that generates the best or the most net profit. But sometimes, you have to look at other factors to make sure that that's actually the best result. Let's go ahead and click OK. This is going to go through 20 different scenarios of stop. Let's optimize. And there we go. I know by looking at the trades here that something changed because we didn't have these long trades as we did before. So let's go ahead and go to the data and strategy performance report. This is the one that gives you the most net profit. But look at my profit factor, went down to 1.35. So is this something that is better than the other one? I'm going to have to let you guys decide that. Take a look at the largest losing trade. We're up to 968. And the largest winning trade, it's 3,200. So it's a give or take, Now, of course, we are increasing our risk by increasing the amount of the dollar trail, but it's giving us an opportunity to make more money on the larger trades. If we pull up what's called the optimization report, that'll give you a little bit more information. So let's go ahead and make the font here bigger. These are the 20 tests that it ran. Take a look at the net profit. Any number like 4, 9, 8, 7, 5. So 4, 5, 6, 7, 8, and 9, and 10, are at the top 7 spot of giving you the higher net profit. This one right here, which is the one that we set it to manually just to test, $1 is the one that gave us about $4,400. But that's the one that gave us also a win-loss ratio of 2.58. So I can sort by maybe this win-loss ratio and see which one is the highest. The highest is, 1. Now, the one that was selected, no, this is not what I was looking for. Win-loss ratio, that's just looking at the number of trades. What I'm looking at is here, profit factor. If I sort by profit factor, yes, the $1 is the $1 is the one that gave me the best, profit factor. The one after that was using what stop? $4 instead of 1. But also it's very close to the one that the strategy selected, the one that has a $9 stop. If I go here to row number 2 and I right click, I can apply that test to the chart and then come back here and look at that report specifically. So I like to do that sometimes. I like to look at the other scenarios because sometimes, the one that it picks automatically is just based on pure net profit, but it doesn't look at the other components like profit factor, percent profitability, time in the market. So sometimes those are important aspects to consider on the chart. Take a look over here. I kind of, reduced my losing trade. Using the one that the strategy picked, my losing trade here was $900. Now I'm down to 400. And I still have a large winning trade. So some of the things, you have to take a look at and see what works and what doesn't. Can we do this on an option chart? Yes, you can. Now, options are known not to have a lot of historical data. So that could be a little bit challenging, but you could run a strategy on an option symbol. Let's go ahead and take a look at a couple of things here. Spider, for example. Let's go and, because we have a good report on Spider. As soon as I change this to something else, let's say that I load Disney, for example. Disney has a totally different profile, like movement profile. If I go over here to the strategy performance report, this is still profitable, but it's not as good as it was on Spider. And it's got to do also with the trailing stop. Remember that we picked a $4 per share, which may not be appropriate based on the value of Disney, which is less than SPY. We're talking about 4 times cheaper than Spider, so we have to adjust that trailing stop. So this could be a little bit better. Well, let's go over here and see if we can add an option symbol. I'm going to go here to edit symbol, go to lookup. Let me go to options. I'm going to do Spider options, lookup. Let's look at, we have multiple expirations here. Let's choose the one expiring is the 19th. The one that is the monthly one. Let's go ahead and take a look. So the 19th this is September 19th. That's a weekly option, right? So we want 1, 2, 3. The ones that expire on the 16th, those are the monthly options, right? Let me choose this one that is close to $398. Okay, so this is on a daily chart. You can see that the very first trade that we have is from September of 2021. So it's very lightly traded when compared to a stock. Of course, this is a daily chart. If we go here to a 30-minute and load 60 days of data, we get a different story. Now, the trailing stop, of course, needs to be adjusted. I want to double click here and say, give me a true. Well, let's do false. But in this case, instead of shooting for $4 on a call that is priced at $1.72, let's put in a quarter of a point and see what that does. Maybe. A quarter of a point. Okay, because options is already multiplying it by 100. So we bought at 157, sold at 172. So this seems to be the way to do this. So let me go ahead and optimize this and see what happens. I'm going to go here to optimize this value. It's going to go from 10 all the way to 100 in increments of 5. Okay, so it picked 85. If you go to the data strategy performance report, so this is the report of that trade. Of course, you can see that this is a strategy performance report based on 8 single trades. And it's very little you can do to manage that. I mean, you can go to the 1 minute. So let's do 1 year worth of data. 1 minute, 1 year worth of data. So this will give you more trades. And if we go over here on a 1 minute, we probably have to reduce that trailing stop. Let's reduce it to $50. Okay, and we go to the strategy performance report, and this is what we get. So to answer you, yes, you can use it in an option. You just have to, be aware of the limitations of the historical data and how it reacts, to these trailing stops. It seems like it's using a 100 multiplier based on the option value. Okay. All right, that's the information that I wanted to present, just the ability for you to grab any strategies from the box, put them on the chart, and use it as a sandbox just to see what combination of strategy elements really works for you. The next step, as Prasad pointed out in his question, is once you start introducing some custom ideas, like what would happen if I do this and what would happen if I do that, you could probably, program that and take it, one step further, which is the way to do it. If you're going to be trading with a strategy, you would want to introduce your own ideas, and that you need, a little bit of programming knowledge of. Okay. So guys, thank you so much for joining me today. Thank you for being part of the TradeStation Masterclass. And I hope to see everyone in my next class tomorrow. Remember that tomorrow we have John Brook to answer our easy language questions. Okay. Thank you guys for being here. I'll see you guys tomorrow. Bye-bye.